In 1998, global markets were hit by a crisis that would change the financial world forever, the Russian financial crisis. A crisis so severe that it led to the devaluation of the ruble, a default on government debt, and a near collapse of Russia's entire economy. But what caused this monumental crash? Was it Russia's political instability, its crumbling economy, or was it the global financial system's tendency to push countries and markets to the brink? The truth is, it was all of this and more. But for George Soros, the Russian crisis wasn't just a disaster. It was an opportunity to play a game of high-stakes financial chess. While governments and politicians scrambled to manage the crisis, Soros and other hedge fund managers were calculating their next move. The Russian financial system was like a giant chessboard, and Soros was ready to make his move. The question is, could anyone have seen the collapse coming? Was Russia's financial implosion inevitable, or did the market simply push it over the edge? What do you think? Should investors have been more cautious, or were they simply playing the hand they were dealt? The collapse began when Russia's debt levels soared and the country's economy failed to grow at the expected pace. But the final blow came when Russia's central bank raised interest rates to 150% in an attempt to shore up the ruble. This action only made the situation worse, as it caused capital to flee the country and led to an inflationary spiral. Soros, ever the market visionary, saw the perfect storm brewing. While others believed that Russia's default was just a temporary issue, Soros saw a much larger systemic problem. The financial structure in Russia was simply not sustainable, and he placed a bet against it. It wasn't just about trading Russian assets. Soros and other hedge fund managers were betting on a collapse of the system itself. If they could push the market just a little further, the dominoes would fall, and fall they did. But here's the crucial question. How could Soros anticipate the crisis so precisely? Was it pure luck, or was it his unmatched ability to read the geopolitical landscape and understand the emotional psychology of markets? While many investors saw the situation as a temporary blip, Soros had already decided that Russia's economic system was fundamentally flawed, and he wasn't alone in his thinking. As the crisis unfolded, global investors scrambled to adjust, but the damage was done. The ruble collapsed, Russia defaulted on its debt, and the country spiraled into a deep recession. But for Soros, the loss wasn't personal, it was just the cost of doing business. To him, it wasn't about right or wrong, it was about understanding the game at a deeper level. He wasn't playing a short-term game. He was playing for the long term, and he knew how to use geopolitical instability to his advantage. When the dust settled from the Russian crisis of 1998, the global economy was left to pick up the pieces. But for Soros and other hedge funds, this wasn't just a market correction, it was a reminder of how fragile the financial world really is. In the aftermath, many questioned whether Soros had exploited the Russian crisis for profit. Was he a financial predator, or was he simply doing what any investor would do when the system breaks down? Soros himself has always maintained that his goal wasn't to cause harm, but to understand the forces driving markets. For Soros, the crisis wasn't an accident, it was the result of systemic flaws. And when he saw those flaws, he didn't wait for the government to act. He acted first, betting against the system and profiting from its collapse. Does that make Soros a genius? Or does it make him a ruthless opportunist? But here's the twist. The Russian financial collapse wasn't an isolated incident. It was a part of a larger pattern of emerging market instability in the 1990 seconds. The Asian financial crisis of 1997, the Latin American debt crisis, and the collapse of the ruble were all interconnected. Soros wasn't just predicting individual crises, he was predicting a global shift in financial power. He saw the world's financial system as a high-stakes game of chess, with each move by one country influencing the moves of others. And just like a chess master, Soros knew how to manipulate the game's pace, force moves, and take advantage of weaknesses. So, what can we learn from Soros' approach? Should we consider global financial crises as opportunities, or should we approach them with caution and humility? When the world's markets are in turmoil, is there room for ethical investing, or is the pursuit of profit always going to overshadow the long-term consequences of financial decisions? Soros' success during the Russian crisis was a mix of strategy, timing, and an uncanny ability to predict the emotional reactions of global investors. But let's not forget, every victory in financial markets comes with a cost. As Soros said, it's not whether you're right or wrong that matters, but how much you make when you're right and how much you lose when you're wrong. In the end, Russia recovered from its crisis, but the global financial landscape was forever changed. The lessons from the Russian financial crisis of 1998 are still relevant today. Markets are driven by perception, not just fundamentals. Emotional reactions shape outcomes. And systems are only as stable as the trust people have in them. Soros' bet against the Russian economy didn't just reveal flaws in the Russian financial system, it exposed flaws in the global economic system itself. As markets become more interconnected, the risks are greater than ever, but so too are the rewards for those who can read the signals and make bold decisions. So I'll leave you with this question. When the next crisis hits, whether it's in Russia or another emerging market, will you be ready to play the game? Will you see the opportunity, or will you be too afraid of the risks? The financial world is like chess, and only the boldest players win. Thank you for joining us on this exploration of the 1998 Russian financial crisis and George Soros' bold bet against a collapsing economy. Was Soros simply ahead of the curve, or did he take advantage of a nation's weakness? The line between opportunism and genius is thin in the world of finance, and this moment was no exception. What do you think? Was Soros playing chess while others were playing checkers? Let's hear your thoughts in the comments below. If you enjoyed today's deep dive into one of the most dramatic financial crises of the 1990 seconds,
make sure to like the video and subscribe to the channel so you don't miss future episodes on legendary investors and the most powerful moments in financial history.
Turn on notifications to stay updated, and join the hidden investor community as we continue uncovering the stories that shaped our world. See you in the next episode.